Okay, good morning, everyone. It's Louisa. It is Thursday, February the 26th, and just going through my daily checklist. And I've been on the charts for a couple of hours, just seeing what's happened overnight. So I'm just going to quickly review this with you guys on the hourly. I'm actually going to start on the 4-hour. Higher time frame, I am bullish this week. So here we are on the 4-hour. We've got sell side below us. We've got buy side above us. We have these daily and 4-hour SIBIs up here to the left that we have not yet tapped into, but you can see that we're getting closer. Hi, Donald. Thank you. Hi, good morning, Heidi. So we have this liquidity up here on the 4-hour and 1-hour, and this is from the sell side of the market maker model, and we are currently on the buy side of the market maker model. So that's on the 4-hour. We'll just move down to the 1-hour now. This is the range that I have outlined on my chart. This encompasses 20 days of IPTA in my range. And this is the range that I'm working in. So this is the sell side of the market maker buy model, and we are currently on the buy side. So I am looking for longs. Even though there may be some great opportunities for shorts, I am looking for longs until IPTA realizes its objective. And we can only surmise what its objective is, but we'll just be monitoring that on a weekly basis. Okay, I have all my little psychology notes because this year I'm working on my psychology. Okay, so we just moved down then to the 15 minutes. We'll take a look at what happened overnight. So what happened overnight is here is Asia, and Asia basically trended. So it moved down and then it moved a little bit up. We had London that really just accumulated. This is our morning session so far. So we can see that I woke up for London last night. So far this week, I've not had a trade in London. London has failed to break the high or the low of Asia during the time frame that I am looking for. So I am looking for manipulation between 2:30 a.m. and approximately 4 a.m. And if it doesn't happen, then I walk away. So we can clearly see here last night I walked away because London did not take Asia's high, it did not take Asia low. Therefore, there is no trade for me. So I'm very strict with my rules. And so far this week, I have not had a London trade. So those are my rules. And I just stick with them. Know your rules, have rules. Okay, I'm gonna put this one back on the hourly since I'm staying on the hourly. On the higher time frame here. We have this hourly SIBI here has been quite an important range. You can see that we came back into it and we've moved out of it overnight. We have previous day above us, although ES, wait till I get to the other chart. Somebody just took Asia high or London high, but let me just get there. And I've got my 4-hour and my 1-hour candlesticks, my chart. Okay, so that's my hourly chart. Now I'm going to go to my working chart, and I just want to share with you guys, I'm on the 5-minute here, that I'm experimenting by changing the, I guess, the view. Hopefully this works. Hey, 9681, I'm doing home office, so it's trading day. I love a good homework day. I work from home day. Okay, so I'm going to let me know if this is just too busy, but I want to keep an eye on ES, which is in my top right, and then YM in my bottom. So we can see that NQ is over here on my left. This is the 5-minute chart. I've got this located on my chart. This is my opening range gap from Sunday night. We haven't filled it yet. So I put that on my chart. Here is the opening from Sunday, February the 25th. So I have that on my chart as potential liquidity up there. We can see that NQ did not take Asia high, but ES just did take Asia high. So we can just see up here, we did take Asia high. And then for YM, we also took Asia high. So NQ was the only one that did not take Asia high. So that gives us, that basically gives us an SMT. We had news this morning at 8:30. That was unemployment. We can see here that last month our unemployment claims were 208,000. We were forecasted this month for 217,000. And we can see that the actual number came in at 212. So unemployment claims came in below what the federal government or whoever they use to collect these numbers. The numbers have come in less than. So there are less people claiming, there were less people this month who opened unemployment claims than anticipated. So I don't judge how these numbers affect the market. I just like to understand what's happening. Hi, Delma Life More. Thanks for joining us. Yeah, we're all still learning ICT trader here. Listen, I'm a student of life, so I get you. German, Sanchez, good morning. Asia manipulates and London accumulates. We to expect with New York to distribute. Well, I'm on the higher time frame, I'm bullish. So I'm always when the market is bullish or when I have at least a higher time frame objective of bullishness, then I'm looking for a manipulation to the downside. I'm looking for a sweep and purge to the downside, which would then assist in moving price up. Yes, took the Asian high, NQ didn't, so SMT divergence. Exactly. Well, SMT divergence just before open, but let's keep an open mind. Again, on the higher time frame, I'm bullish, and if you look on the weekly or the daily, I think that that's a fair assessment, but you guys, you make sure that you do your due diligence. I'm just sharing my thoughts. This channel is for entertainment purposes only. I am an ICT student. I don't encourage anybody to trade due to the losses. This is not a call service, and you guys have to, of course, do what's right for you. So there we go. I just want to highlight that I have not had a London trade this week just because we have not really had manipulation above or below Asia. So that's my criteria. So it's been a quiet week for London, and last week was a great week for London. So anyway, just watching price here before the open. Unemployment claims were a little bit lower than anticipated this month. So that's good news for the people. So price is really pushing down here, down to London low, potentially back into this sensitive area here. This pink area is a SIBI. We have previous day high up here, and we have previous day low down here. So we are kind of in the middle of the range according to price movement from yesterday. I'm just going to highlight that I look for A+ setups. I'm looking for potential manipulation. inside a time frame. I'm looking for manipulation or continuation at 9:45. Now we've had a nice move down. It could mean that there's a continuation in New York AM. We don't know till open, which is in a couple of minutes. We do have news tomorrow. We have core PPI tomorrow and PPI month over month. So that's what we have tomorrow. So we do have this this opening range gap from Sunday above us. That's a potential if price is seeking higher prices today. We've got previous day high up here, and we have previous day low well below us. This is an important, anything in blue is an important area where price reprices to, where IPTA reprices to. This SIBI here, I'm going to push out of the way, but this has been an important level that price has been repricing to. I'm going to move it out of the way just so I can see my chart a little more clearly. YM has taken previous day low. I'm sorry, previous day high. Well, that's a pretty big purge before the open. The open just occurred, so we'll see where price is repricing to. Yeah, I do. I don't have settlement marked on my chart today, but I think settlement is an important level. So for anyone who's unaware of what settlement is, settlement price is the 4:14 p.m. price. The price closes the day before. And that is an important level. And so the opening range gap is from 4:14 the day before to where price opens at 9:30 a.m. the following morning. So thank you for bringing that to everyone's attention. So ICT suggested new week opening gap from February 1st as a possible visit. Yeah. Yeah. New day opening gap from today. Yeah. ES has taken London low. NQ is well below. We're just at Asia low. ES has not hit Asia low yet, so NQ is leading and YM is at her own party. We'll see if there's CB holds or not. It's looking pretty bearish at this time. It's 9:34. Notice all this very nice low resistance liquidity. So NQ has just taken Asia low. ES has not. I'm just going to move down to the 1 minute. I just want to keep track of first presented fair value gap, which this is a big push down. Hey, Levere. New week opening gap right here. Here's our first presented fair value gap on NQ. on the higher time frame, Sanchez, I'm bullish, so I'm okay with letting price find its basement here. But it's just taken out all of this low resistance liquidity that was built overnight. So notice that price came down just below midnight and just reapproaching midnight again. Again, midnight is a really important level for me. PS has not taken Asia low. NQ has taken Asia low. YM is somewhere else. First inverted fair value gap, very small, keeps changing. I want to see if this CB holds or not. If it doesn't hold, we could be looking here at new week opening gap. We have previous day low below us, and we still have new week opening gap from February the 22nd down here. A couple of times this week that we've had pre-market nice rundown manipulation above London or Asia. Again, we've swept Asia here on NQ. We have not on ES. And we have YM starting to show weakness. ES just taking Asia low. So feeling quite bearish. We're at the bottom of this SIBI and just breaking below the first presented fair value gap. I might take a short. Yeah, exactly. A strong take with displacement, showing some conviction. Exactly. Price moved down, retracement. Have not broken this swing low yet, but looks like it's definitely possible. Asia showing strength. First presented fair value gap. Macro has started. Hi, Just USA. Sorry, guys, I know I get a little quiet when I'm in a trade. So low, high, low. We've got a breaker, a bearish breaker. We broke below this 1 hour SIBI, below the first presented fair value gap. This is drawing liquidity here. This is changing the state of delivery right here. So I don't want to see price come back above where I entered the trade. I entered a little bit late. That's my, it's never going to be perfect. 1 minute till the 10 a.m. candle opens. We know there's going to be like a little bit of a bounce. Remember, open, high, low, close. Buy one back, protect some profit. Notice, guys, as institutional order flow, we continue to make bearish breakers, right? So we got low, high, low, low, high. I want to see this low broken. I want to see that continuation, but you can see breakers all the way down. I want to get below this low. We have 4 more minutes left in this macro. Yeah, so that's a super, super great question. Always in my mind, I have a point at which I'm going to exit the trade. So you can see my stop losses up here, but that's got nothing to do with my trade. I am watching very carefully price, and I'm looking for key signatures in which I will remain inside the trade. I have to be firm on my point B, my terminus point, and then in between that, I'm carefully watching price. So I want to see continually bearish breakers being made, right? So low, high, low, low, high, low. So I'm looking at the swing high. If that gets broken or there's a change in the state of delivery, I'm out of the trade. So I have like a psychological, so I'm going to watch very carefully here. I'd like to see previous day low being taken, but you know what? I'm not going to get greedy. This is pretty close to where I would like to see price go. I'm not going to hold through to the next macro. In fact, I might end this very shortly here. Considering that I entered the trade like 50% of the way already through the move, right? Because manipulation occurred before 9:30. Let's see if we can dip into this new week opening gap here, but I'm not gonna get super greedy. We might hit previous day low. That was a nice push down. It's a nice limousine down. And as price gets closer to its terminus, IPTA generally prints pretty strong candles. And so we're watching that because if price has a smart money reversal, that's going to be the inflection point to create our inverted fair value gaps for the move up. So, this is a beautiful printing of this candle, which if we get a smart money reversal, then this will eventually become the inverted fair value gap to support price moving up. But at this point, price is still digging into its objective. Limousines going downtown. That's what I call them. The stretch limos. I'm going to just move my terminus down a bit because sometimes price can wick. I mean, we've got these new day opening gaps down here, but let's wait and see what happens here. So the first macro is coming to its conclusion. We have now filled the new week opening gap. I am quite content with where price has gone, so I'm not sure I'm going to remain in for the next macro. As we know, we've seen before that between macros we can get price distortion. So one has to ask oneself, okay, well, this was my terminus. It's been achieved. Objective has been achieved. What we can do is move up to the 5 minute and just take a look at the bigger picture here to see if there's more in price to drop. But overall, pretty happy with this trade. Exactly. Dull my life more. Yeah, and I just want to reiterate that although I'm bullish on the higher time frame, I'm careful not to be married to. It's one thing to have a bias on the higher time frame. It's another thing to be reading institutional order flow. I think I'm probably just going to exit here. Um, one is not mutually exclusive to the other, right? We've achieved previous day low. I'm just taking a second here. So even though on the higher time frame I'm bullish, when I look at institutional order flow, I'm remaining very technical. I'm a technical trader. I see a trade, the technicals make sense to me, I'm going to enter it. And I never want to come to the market and be so entrenched in a trend that I refuse to read what the market is presenting to me. I think as traders, we need to read what's in front of us, be mindful of what the higher time frame is, but also be mindful, when you look at this market here on a macro level, this is all low resistance liquidity, and that's a beautiful thing. So when you see an opportunity like this, yes, be mindful of the fact that the higher time frame has been bullish, but you know what? Uh, you have to read your technicals, and sometimes you just need that inflection point of where would I enter this trade? Where would I exit this trade, right? So notice that like I don't even care about profit. Like I'm not watching profit. I'm reading price. I'm anticipating where the terminus is. We're a little bit past that now. So where is the next terminus? What is price showing me? I'm not focused on, I don't close a trade based on profit. I don't close a trade based on how many points. I close a trade based on once that trade retreats to a point, or at least achieves a point at which it makes sense to close the trade and be content. And so, a great trade is not, for me, a great trade is not based on what the profit was. Sometimes you can have a great trade and there's no profit, right? I'm just watching price carefully here. So if your execution, I'm looking at execution. How was my execution? Well, I was late, to be honest. So when I enter this into my trading journal, that's something that for my next trade, I want to be focused on. I'm probably gonna exit this. We still have this, I know it's a long way down here, but we still have these new day opening gaps just to kind of clean this up down here. I don't know if price will push down there. We're between macros right now. It's kind of like being on a diet. If you're so focused on what your weight is, you're kind of missing the point. If you go to the gym 3 days a week, you lift some weights, and you stop drinking alcohol and stop eating sugar and reduce your carbs, the process is the important part. The process is, can you stick to your plan on a daily basis? And then the weight and the body recomposition takes care of itself. I'm not going to focus on weight loss uh, on a diet. I'm going to focus on my process. What am I changing? What is my plan? How am I going to stick to it? Trading is the same way. If we focus on the money, then we're missing the point. The focus is on your plan, your analysis, your ability to execute, your psychological threshold for what is the amount that you can trade with that you are not trading emotionally, that you can detach from emotional attachment, from money, and focus on the actual trade. Focus on my entry. How am I managing this? How are my emotions? How do I feel right now? Is there fear? Is there excitement? What is that? Where does that come from? Is it good, bad, or ugly? But when we can totally detach from the outcome and focus on, are we getting better with execution, analyzing the chart, being prepared for these kinds of trades, these types of opportunities? If we can focus on these things, our trading will improve. And then you have a good day where psychologically it's just a nice trade. There's no excitement in this. There's no disappointment. I don't leave at the end of my day feeling elated. It's just a trade to me, and I'm trading with a size that there's no emotional attachment, and all I'm doing is remaining fixed on what price is showing me, what price is telling me, and we are not focused on anything else. And sometimes it's after the trade that I have to go back and see, like, what was my profit, because I'm really not focused on that. It's 10:23. I really don't want to stay in the trade for the next macro. I'm pretty content. We could see price come down to here, but I'm on the 5 minute. I find there's less emotion on the 5 minute. If you're on the 1 minute, like it's an emotional roller coaster. So once the trade starts to move and you know that you've gotten into the position at a good point, increase the time that you begin to manage the trade. I mean, unless you're a scalper. Um, but move the trade to the 5 minute or the 15 minute, zoom out, take a look at the bigger picture, and then you can just kind of relax a little bit more and manage the trade from a point of complete detachment. I am completely detached from this trade from beginning to end. And that's how I like to trade. I like to trade with detachment. If I'm excited or I'm fearful, I'm not going to be looking at the markers that I need to be looking at with a clear mind. Once fear and emotion enter your trade, you are not going to see the market, the price action the way you need to in order to be objective. Once you lose objectivity, you're trading from a place that doesn't even see things clearly anymore. It's 10:25. This is a bit of price distortion through here. See how we're looking on the left side of the curve to help us guide us on the right side of the curve. So I'm looking here to see, okay, why is price stalling a little bit here? So we've got some price distortion here. We don't have like really any good fair value gaps. We do have the new day opening gap, new week opening gap down here, and then we do have sell side down here. So this is what I'm looking at. I'm looking at the left side of the chart to help guide me in this. I said I wasn't going to stay in this for the second macro, but I think I might exit and just be content with enough now. I keep saying that. Okay, I think I'm good to exit this trade now. So where did we get out? 24,960. So let's just see how many points that is. 24,960. So where did we enter this trade? We entered, the hell did I enter? Sorry, I just want to go back and see where the hell I entered. The breaker block right here. Okay, so 25,232. Subtract 24,900, 24,915, somewhere around there. So that's 317 points for this morning. So I think so. Sorry, I get very dialed into my trade management when I'm involved. So I've missed all your questions here. So I'm just going to go back and I just want to read some of your questions and respond to anything that needs to be responded to. Okay, let me go back up here. Okay, Lou da Vinci, you asked me, did I take anything yesterday? I had some personal things to deal with yesterday. So yesterday was not a day that I traded. Just USA, this week all run happening at open and then consolidates all day. So what we want to remember is that after price has a big move, it needs to regroup. It needs to breathe. It needs to collect itself. This was a big move today, but look at the accumulation that's led up to this big move. Look at this accumulation. This is beautiful. I'm going to go back to the 5 minute because I think it's just a bit easier to read price here. But we should get really excited when we see this type of accumulation, right? So when we see accumulation, and we've seen it for a number of days, right? We've had accumulation here, price moved up, accumulated, price moved up. You know, we are well up here at a point, and that we can anticipate a big move either way. It could be either way. We don't know which way, because price is engineering liquidity above and below. So what we need to focus on is to identify manipulation. Manipulation is the key to understanding where price wants to go. Okay, next one. BISI 1 hour tapped, stalling a bit at consequent encroachment. Guys, I want to ask a favor of you. We are talking the language of math here. So when we talk about that anybody sees a BISI or a SIBI, kindly mention what time frame you're seeing that on, because it makes a big difference between, like, if we tap into an hourly SIBI versus if we tap into a 1 minute SIBI. And that way, when we're all looking at our charts, we can utilize the wonderful comments that come from our community, which is collectively helping all of us. So let's be specific that if price is approaching a SIBI or a BISI, let's talk about what time frame that is, so that we can immediately look at our charts and go, okay, definitely on the hourly, that would be like of much more significance than, say, a 1 minute. So if we can do that together, that would be fantastic, because I think we would all benefit from that type of specificity. I like the push down from the 1 minute SIBI. Thank you. Thank you for mentioning that was a 1 minute SIBI. That's very helpful. I'm curious, if we don't make a low, what bullish signature do you look for to then get out of the trade? Yeah, again, when we enter a trade, that is point A. Our terminus is point B. Then we measure what is our risk to reward, what is our risk on the trade. And we have to keep in mind that although we have a point B in mind or a terminus, trade management is about reading price in between A or B. Because at any point, price can reverse, price can accumulate, price can stall. And so we remain objective that even though we have our B, our terminus, which is where I have this little thing here, that as price approaches that, what are the indicators that would make this trade no longer viable? And I have that in my head as price is moving. I always have the level at which I'm pulling the ripcord. So I'm monitoring on the left-hand side, right, of the market maker buy model. I'm looking for those PD arrays, and if we keep respecting them, I'm going to remain in the trade. It's a really good, it's a really, really good question. Okay, next one. Also looking at previous day low, but not sure we will get there. And yes, it's late in the move. Yep. That's the thing. Once 100 points has already gone, we have to realistically look at the market, look at the levels and say, okay, how much further does price have to run? Now, in today, we had a lot of low resistance liquidity that the market just wants to redeliver price to, and that is the objective of the market. On the buy side, we have sell side inefficiency. We are right now delivering sell side to the inefficiency on the left-hand side of the market maker model. Nice bars. Yeah, I call them limousines, like going downtown in a limousine. I think of myself in like New York City, which I'm not, but I want to be in one of those stretch limos with all you guys. Exactly. All these gaps are going to be used to support price coming back up. This will eventually become the support for the new buy side on the market maker side of the market maker model. We should also keep in mind that when price drops really quickly like this, once price starts to move up, it's going to be high resistance liquidity. So we can be watching for that, because that's when we get the deep retracements, the wicks. It's a rougher ride up when we have a drop that's as fast as this one. Okay, nice macro. Yeah. Okay, just USA. Whole manipulation yesterday was NVIDIA trapping bullish narrative. Okay, good observation. Sometimes I look at ICT. I look at ICT very rarely these days, and I'll tell you why. Sometimes when you have a system that's working, for self-preservation, for me, you have to stop looking at what everybody else is doing. Because once you arrive in a place where you can you have a system that works, you are abiding by it, you are demonstrating to yourself that you're becoming that trader that you need to be. Having so much input from other people, I just find is just noise at this point to me. And once in a while, if I'm having trouble reading the market or I really have no clue, what's going on, then I'll check ICT's posting. But I like what he said in one of his sessions. He said, when you finally find your model and you have your system that's working, you don't need to ever come back and watch one of my videos. And so I haven't been watching ICT, I don't know, for 4 or 5 months now. And it's just at a point where I'm at. I can trust myself. I'm not bad at reading the market for most of the time. Not all the time. There are some days if I can't read the market, I'm not going to do anything except move to the side and then maybe watch one of ICT's kind of higher time frame, uh, just to get another perspective. And I trust him implicitly. He's like my biggest mentor. So not focused on profit. Exactly. Do not focus on profit. Levere. It's okay, Levere. The next trade is coming. Is like the next bus is coming. Don't worry. No FOMO in this group. Honestly, honestly, no FOMO here. So at last, New York, AM distributed down. I was late to the move, so no FOMO. We'll wait for the V recovery later. Yeah, and just guys, bear in mind that V recovery may not be today. Okay. We've got news tomorrow, so potentially news, but give after a move like this, give the market some time to breathe, to recover, before rushing into something. There is a 10-20 macro. Okay, I have my macros. They're XX45 to XX15, so I'm just going to go with that. The straight short scares you a bit. Again, look at all this low resistance liquidity. This market has been building low resistance liquidity for the past 3 days. Let's see here. On a daily bullish SMT, and if a daily bearish gap form, then there's high probability of bearishness. Okay. Just discovered your channel yesterday. I really appreciate your calmness. Okay, that's good. I think I am calm because I trade with a size that I have no emotional attachment to. I'm focused on psychology this year, like 100% psychology, and I'm going to be posting some videos on some of the things that are helping me. And reducing position size has been key to me being able to 100% focus on trade management, anticipating trades, and just overall. Like I know what my threshold is. Now, over time, I'm going to be increasing that threshold, but I can catch these kinds of trades, and I know what my number is that I start to get fearful, that I start to feel emotional, that I start to feel fear, that I have sweaty palms, and I'm building my ability to increase trade size without compromising being able to take trades like this. Okay. Anyway, happy to have you here. Love your enthusiasm and input this morning because we all benefit from each other. 100% calm and no flashy bullshit. Yeah, I'm not about the bullshit. I'm so past flashy bullshit. I'm just not. What you see is what you get with me, guys. There's nothing flashy on this channel. I guess you guys have probably figured that out. Just entered in the consequent encroachment of a 4-hour inverted fair value gap. Okay. Donald, I understand how today's Asian and London's high lows are draws of liquidity, but how about the previous day, such as 225 Asian and London lows just being swept. Donald, that's what I look for in London. I want to see Asia range, right? I don't want to see Asia go from point A to point B. When I see Asia going from point A to point B, the probability of a good trade in London decreases. So I want to see Asia range, and then I want to see London sweep the high or the low, and I want to see a smart money reversal. And I think so far this week, there's only been one opportunity. I'll go back after I answer all these questions and we'll take a look at that together. Donald, how long back would you look for liquidity sweeps? How long back would I look? Could you, Donald, can you expand on that question a bit? When you say how long back, do you mean price level or uh, days of the week, that kind of thing? Could you just help me understand that a bit, please? Yes, just put up a flashy car in your background. You know what? I'll tell you something. I'll be buying a home in Italy long before I buy a Lambo. I live in Canada. I live in a place where if you have a nice car here, you're only driving it for 4, maybe 5 months out of the year. Like, okay, very good question, Donald. Give me 1 second because we're going to review every Asia London session for the last 5 days, and I'll show you exactly what I mean. I think what I'd like is eventually I'm going to buy probably a 4x4 because I'm in a really big snow ice kind of I live in a, obviously a country where from end of October until beginning of May, it's really cold, bad weather here. So, if I get a supercar, which I might, I'm gonna have to rent storage for it or something. You need to try Florida. I know, Donald. I just might surprise you. I might just buy that Lambo and drive until the butter melts. Okay, so guys, Donald's asked a really good question here. So I want to expand. I want to go to the 5 minute, and I want to just take off a bunch of stuff from my chart so we can see clearly Donald's question about how to trade London, or not even trade it, but to understand that what happens in Asia in London is the precursor for what happens in New York AM. If you're not watching Asia London, you are missing the movie trailer. And I'm sure nobody goes to the movies anymore without watching the trailer to get an idea of how good or bad the movie's going to be. So we need to do the same thing with Asia and London every night, in my humble opinion. So I am going to remove a whole bunch of stuff here so we can very clearly take a look at what Asia and London. I'm going to move my sibbies and stuff out of the way. Let's just take a very clear look. I'm going to take my SMTs off for now, just to clean all this up, because this is such a good question. And I love to trade London because I love how clean it is. Like, I find London so straightforward to trade. Okay. So let's start with, I'm going to make this really big, and we're going to go back session by session, Donald. Okay, so first thing is, okay, yeah, so my time period for Asia London. So when the market opens at 6 p.m., between 6 and 8 p.m., that to me is like a nothing. That's a big fat nothing. For me, Asia opens at 8 p.m. and then London opens around 2 a.m. But manipulation for London is anytime between 2:30 and about 4 a.m. I think this week and last week there was manipulation at 4:15, but basically if I don't see manipulation by 4 a.m., then there's no trade for me. So that's my time frame. So let me just show you guys what I'm looking for. And this blue box here, this is Asia, okay? My gray box is here. I have London broken down into 3 time sessions. Like this is a 90-minute time cycle. This is the second 90-minute time cycle, and this is the 30-minute time cycle. So I have 3 time cycles that I'm paying attention to. The first one starts at 2:30 and goes till 2:30, 3:30, 4. And then the next one is 4 to 5:30, and then 5:30 to 7. And then at 7 starts my AM sessions. And I have AM1, AM2, and AM3. So these little gray boxes here are my London session. So here we can see that London, or that Asia, opened and moved down. Then we had accumulation. And then right here is an interesting area that could have been an entry, but again, I don't trade Asia because it's just too slow for me. But we had a smart money reversal here. So we can see we had a smart money reversal. I won't go into the details. Then price came back into this BISI, and then price moved up. But let's just focus on what I would look for a trade. This price action here is not really accumulation. It's kind of point A to point B. So when I look at this, I wouldn't anticipate taking a trade in London. I want to see Asia do this. I want to see Asia accumulate, and then I want to see a sweep by London either above or below, then look for a smart money reversal. To answer your question, Donald, I'm only looking back to the current Asia session that is right in front of me for the same night. Okay, I'm not looking back to 2 or 3 nights ago. I'm looking at this Asia section here. Now, when we look at last night, and I woke up to see if I could find a trade, London opened in the middle of this Asia range, and that was at 2:30. So I'm looking for manipulation between 2:30 and 4 a.m. So price starts to move up, and I think to myself, okay, I want to see price come up here and ideally into a PD array. If I can find a PD array above this Asia range that London could tap into, that is a high probability trade, and I'll take it every single time. If there is no PD array above here, I still will look at the trade if there's a smart money reversal, because London is sweeping Asia, the engineered liquidity from Asia. But if there is a PD array even on the 15-minute, it doesn't need to be on the hourly, but even on the 15-minute, this makes a high probability trade. But look what happened last night. So Asia had this nice wick up, right? And then came back down, moved up again. Now this time, this is 4:45. So my rule is that we have to have a manipulation by 4 a.m., which we don't. So when I saw this kind of weak price action, and by 3:55, we were still in the middle of the Asia range, this is like my cue to go back to sleep. Because I don't anticipate London then, making a huge push up at 4 o'clock to 4:30. It could, but it's outside of my time. So this is a no bueno for me. Then we see Asia coming up this morning, or sorry, we see the AM session come up this morning, but we still don't take Asia high, which I thought was kind of interesting. So let's go back and look at the previous night. So this was a no trade for me. Okay, so this is no trade. No trade for me. No trade. Let's go back to the previous one. Now, this is lovely. This is what I want to see. I want to see accumulation, and this is exactly what we got. So this would be of interest to me, but let's look at the time. So London opens at 2:30. Those are my time cycles. So Asia opens at 2:30, has this what appears to be a smart money reversal, but it didn't come down to take out Asia low. So again, I'm waiting between 2:30 and 4 a.m. for manipulation. Do we get a manipulation? Well, we get a manipulation up here, but what time is it? It's 7 a.m. So this is a no trade. This is a no trade. Let's go back to the previous one. Here we go. This is what we want to see. We want to see accumulation. And let's look at London now. London opens at 2:30. It comes all the way down, and what happens? It sweeps Asia. Let's look at what time that is. 3:45. Okay, it's still in our time. Okay, it's between 2:30 and 4 a.m. And what else is important with this time? It's inside a macro. Remember that for me, time always comes first. Time, then price. So now we're going to look for, so this is on the 5-minute, and we're going to look for a smart money reversal. We have swept the lows. Let's see if there is a PD array that price has tapped into, not on the 5-minute, but we could look on the 15-minute or 2-minute. We may have a PD array down here. I don't know. I'm using this hypothetically because if there is a PD array, it's high probability. Now let's look for the signature of a smart money reversal. Now I'm just going to stay on the 5-minute, but we could go down to the 2-minute or the 1-minute. And in London, I would suggest that because the London and the New York PM time sessions are shorter. So New York AM open, I'm okay to stay on the 5-minute to look for an entry, but on New York PM in London session, I want to be on the smaller time frames. So, but anyway, let's just stay on the 5-minute time frame for the time being. So we get a nice sweep. Now we're going to look for a smart money reversal. So what is a smart money reversal? We want to see displacement. First of all, we want to see purge of liquidity. Check. Next, we want to see displacement away. Do we get displacement? We get beautiful displacement away. I'm going to make this bigger so everybody can see this. Beautiful displacement away. Even on the 5-minute, this is gorgeous displacement. I always say that great displacement makes you feel like you missed the move. But that's just great displacement. Now I'm looking for a change in the state of delivery, which is right here. Now again, this is on the 5-minute. But if you go down to the 2-minute or 1-minute, you'll probably find your entry right down here somewhere. But anyway, that's okay. Let's just stick with our. So here's our change in the state of delivery. We have price comes down, pushes up, comes down again, and then pushes up. So we have a breaker. We have a low high, lower low, higher high. It's exactly what we want to see. Now on the 5 minute, we don't see an inverted fair value gap way down here, but I bet we would if we were on the 1 minute or 2 minute, but we could see one here. I'm just going to change that to an inverted fair value gap. Price moves up. So this is how perfect this is. And forgive me for getting so excited, but when I see a setup like this, I just go into like, this is pure joy and love. So, and I want to show you, I'm going to show you after. This is an A plus 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 setup. Okay. So price comes down, it makes this low, it moves back up into this SIBI, which is really an inverted fair value gap, comes down, takes out all the stops here. Smart money is such a bugger, eh? And then price comes up, taps back into the inverted fair value gap, and then moves up. Now, I would want to see my terminus, I would want to see Asia high being taken. That would be my terminus. But we'd have to weather a little bit of, well, actually, it's reached right here. So here you go. What time is that? That would be 7:10. So London moves a little bit slower, so you have to have some patience, and that may mean that you go without sleep from 2 to 7 a.m. But you know what? You don't need to trade London AM session or New York session if you have a really nice trade. So price comes down. Here's our fair value gap. Even on the 5 minute, it's clear as can be. Right, here's our BISI. Just pull this across because oftentimes it's used later in the day. So where's our entry? Well, again, on the 2 minute or 1 minute, our entry would be way down here. But on the 5 minute, clear as day, I would enter off of this. Price moves up, crashes around for a bit, but that's okay. And then eventually takes Asia high at 7:10 a.m. This is a perfect, perfect setup. And I just want to show you. Hold on a second, guys. I want to show you because you can take a second. Okay, here we go. This is what please take a screenshot of this. This is an A plus setup. I will take this any day of the week. So let's compare, please take a screenshot of this. Let's compare how this perfect setup was exactly what we saw that night in Asia. So Donald, hopefully this is, this is really settling in for you, because when you see this, man, like I just get so excited. So price comes down and it creates this SIBI. Now we saw this morning that when price was approaching its terminus this morning, what was it doing? It was creating really big candles, which creates fair value gaps. So this is the sell side of the market. Price comes back into this SIBI. You see how price comes down, it comes back into the SIBI. This is forming a breaker. Why is this so powerful? Well, let's think about this. As price comes down to its terminus, retail traders position themselves here to go long, right here. This is where they're positioning themselves. Smart money is inducing traders into the market. They're making traders think this is the turnaround point, this is the reversal, but it's not. This is how it tricks traders. Price comes back into the range, and where does it come? Right into the SIBI. See that? Here is where retail traders take short positions. So there's a whole bunch of stops here. So now we have stops here and we have stops here. So we have traders positioned to go long here, and we have positioned traders to go short here. Price comes down one more time into either the low of Asia or even better into a higher time frame PD array down here. Okay, this is as I said, if we have even a 15-minute PD array, if price comes into it, this is high probability. Next, what happens? Price shows us displacement, its strength with joy with these big candles. And guess what it does? It's now taken out all these stops. It's access liquidity down here in the higher time frame PD array, and it's now just taken out these stops for traders who thought they were going short. This is how smart money positions itself to get into a trade at the lowest possible price. This is why breaker blocks are the highest probability PD arrays, and this is ICT. And then price comes back into this BISI, so you can position your trade here. And I won't get into the details of if these candles are moving so quickly, they are if they move so quickly, like I think they did 2 days ago, that price won't come back down to this BISI. Okay, it's going to start here, but here's your entry, and then you just take price to the next level of your terminus would be liquidity at whatever you feel is the next level of liquidity. So I want to be very specific here. We need to see 5 times buy side and sell side being delivered. So 1, 2, 3, 4, 5, 6. This is the highest probability smart money reversal. And remember that I like to pair it with an SMT. Okay, so maybe ES does not take out the low here. Maybe ES has a mitigation instead, but if NQ takes it, then we have our divergence and boom, we have an unbelievable trade. Now let's just move this aside for a second and let's go back to our setup here from what day of the week was this? Monday. So we have Asia range, we have London open and come down and sweep or purge liquidity below Asia. I don't know if there's a PD array down here. Donald, what I suggest you do is you go back into your trades and go back for a couple months and look at every single Asia London setup, and you will see this minimum 2 times a week. Okay. Sometimes it's 3 times a week, and it's so clear. So what do we have? We have price come down, and it creates this inverted fair value gap. Price comes back up into this inverted fair value gap. Price comes down, it takes out these stops. Price comes back up into this inverted fair value gap, comes above it, takes out these stops here, comes back into the inverted fair value gap. Now, don't be afraid that we've colored outside the lines here. It's okay. Your stop loss could be maybe below this to be here. Ideally, your stop loss is at the swing low, but you need to decide where your stop loss would go. So it comes back into the inverted fair value gap, and then price moves higher. So 1, 2, 3, 4, 5, 6. That is an A+ smart money reversal. What life? Anyway, I hope this helps, guys. And let's just look at one more. Let's just go back one more. Now, I want to give you guys a little hot tip here. If you don't have the Cronus tools, okay, this is part of, I pay $20 a month and I get these Cronus tools where these gray boxes and blue boxes just print for me on my chart really nicely. But let's just say you don't want to do that. You can go into indicators, and there's an indicator called 90-minute cycles. It's by Handel's Hand. You can take a screenshot of this so you can find it. 90-minute cycles. You can go into here and you can get a free one. Okay, now mine are colored a different color. I used to do this myself until I got Cronus's, and all you have to do is open it up and you go through, and for each time cycle, you just program the times yourself. Now I have programmed them. This one is Cronus. Sorry, I just want to get this one. Here we go. Here's your 90-minute cycle. So this is before I was using Cronus, and I have just programmed all the times. So you will get the exact same boxes that I have on my chart. And that way you don't need to pay for this. But see how easy it is to go back in the chart and look for and have this visual on your chart of your London and your Asia. Now, you don't need to program your AM sessions, but again, this is how I trade. So if you want to just take a screenshot of this, but basically they're 90-minute cycles, and the Asia starts at 1800 to 2:30. And then my London is 2:30 to 4. My second London is 4 to 5:30. And my third London is 5:30 to 7. And then my AM session starts at 7 to 8:30, 8:30 to 10, 10 to 11:30. And then my PM session, which I don't really care about so much because I don't like trading the afternoon session. But if this helps, just take a quick screenshot of this so that when you use this indicator, you can just program this in, and then you can change the color. Okay, so you can change the color here to whatever you want. You should make them lighter, otherwise it's hard to see the candles, but you do you. So again, that is called 90-minute cycles plus MTF. I have no idea what MTF stands for. And that will give you these boxes on your chart. And then you don't need to pay for Cronus. But Cronus gives you Cronus gives you the SMT and stuff. So anyway, I'm just going to take these off my chart. Market maker. There we go. I used this for a long time before I bought Cronus's. I'm going to take off this is and then this is mine with Cronus, and I've just made the colors what I want them to be on my chart. And Asia is just one big 1800 to 2:30. Okay, any questions on how to trade or how to look at Asia and London? Any questions? So 2 is forming now. Okay, I have the Cronus tools, but not real sure how to set it up to look like yours. Okay, so here, just take a screenshot. So if you want the light blue for Asia, this is 1, 2, 3, 4 blues down, and bring this to 85, color to 85. So I've made London. So if I go to my chart here, see how Asia, London, these are the blues. So I've made London morning and afternoon. Again, 1, 2, 3, the fourth blue down. And I've made them number 85. Then for my 90-minute cycles, I've made it the gray 1, 2, 3, 4, 5 over. Again, change this to 85. So you just change it here. And this changes the opacity. Then I don't like borders on my stuff, but you might want borders. So if you want like a, a border, you can put a border on. But then for my 30-second cycle, 1, 2, 3, 4, 5, again, 5 grays in and 85. I only use my 30-minute cycles when I'm trading London or New York PM. And that's basically it. I removed the 10-minute cycle. I don't want to see 10-minute cycles. New York AM open, everything on my chart, I trade with 90-minute cycles. But if you're going to trade the London Asia, just click that 30-second box and I'll show you what that looks like. You got to be on the 5-minute, okay, to see the small detail. So you see my gray boxes now have gray boxes inside the box. Those are 30-minute cycles. Okay, so if we shut them off, let's just move this over. There's my 90-minute cycle. I have it checked, okay? But if I want to take off the 30-minute cycle because it's just too much, uncheck it. You can see it's gone now. Okay. So that's how you set up your colors if you want your colors to look like mine. I like my chart muted, clean, easy to read, but it really depends what you guys like. Donald, if you have any other questions on how to get your chart to look like my chart, just let me know and I'll take you through the settings. Okay, so any other questions here? Let's just go back to what's happening. So hopefully that is crystal clear on the Asia in London. It's really easy. I mean, I'm going to say it's simple. It's never easy, right? Like it's simple. But just go back in your chart like 2, 3, 4 months, do some back testing, and you'll start to see that you get those evenings where London sweeps, and if there's a PD array below or above when price sweeps in, when London sweeps into that, it's lovely. And some of the trades you can stay right in until New York AM open, and I think that's how I got my 733 point trade was London manipulated. We had all kinds of low resistance liquidity, and I just stayed in the trade and took it down 733 points. And it's beautiful. So Donald, you can take a look for that and see, but anyway, it's super, super clear when you've got these boxes on your chart, and you can go back as far as you want, Donald's like, you can go back as far as you like. Here's another one. Asia did not sweep the high or the low. Here we did have London sweep the high. London came up all the way up here. And then AM swept the London high. Here's the London high. You could have traded it down to here. But if you had stayed in AM, this would have taken out your high. So you just gotta go back and look, right? Here's a beautiful sweep, but what's the time? 6:25. That's out of our time range. This one here, we sweep above London inside the time range, and look at this beautiful trade down right into AM, right into New York open. Here's another one here. London did not sweep. Here's a gorgeous one. I think I traded this. This might have been my 700 point one. Asia, London accumulated a little bit. AM took the high, AM2, so we had manipulation delayed because London accumulated, and that was the point to go short. And what a beautiful short. So you start taking a look at what happened in Asia and London, and it's really becomes clear once you start seeing the manipulation. Here's gorgeous manipulation. Now this is 5 o'clock. This is outside of my time. Here, yep, here we take, here's a nice one. Here's London. What time did we manipulate? 4:15. So right at kind of that cutoff point, but a beautiful trade down. London here, you could have taken this manipulation here, traded back into the range, but you would not have taken, it would not have gone up to here. You would have to cut the trade short a little bit, or you might have got stopped out. So anyway, that's Asia and London. I love trading Asia, and when I see that setup, that beautiful, beautiful setup, it just makes, when I see this setup, when I see the smart money setup anywhere, this is what we're looking for. This is what I'm looking for. Okay, so let's just take a look and see what price is doing. It's 11:15. That second macro is coming to its conclusion. So we got a little bit of a push up. Let's just see here on the 5-minute. So the low that was created here, 24,862. If we look to our left, we have this price distortion in here. Notice this price distortion in here. So I'm not surprised that price kind of stalled here rather than dropping down to here. I'm done for the day. I'm obviously not taking any other trades today. But I would be cautious, and I'm not giving advice here. I'm telling you to be cautious. I have experienced that when I miss a move like this, I'm human. I have regrets, of course, but sometimes it can cause you to want to jump into a trade and immediately kind of like get revenge for having missed that move. Experience has showed me that sometimes I need to just accept the fact that I missed the move, or I didn't see it, or I wasn't anticipating it, and that's okay. But give the market some time to sort itself out. This could be just a retracement back into the range, and it may continue to range around here. But let's give it some time to breathe and figure out what it wants to do. Tomorrow we've got news. So tomorrow's another opportunity. We've got core PPI, and we've got PPI month over month at 8:30. So you do you guys, but I'm just saying that I know that there is this need to want to get into a trade today because you feel a little bit of FOMO. But sometimes just going back, doing some studying, what did I miss? What could I have done differently? Journal your emotions, and just take some time to go over it, make some notes, and be ready tomorrow morning. That's all I can say. Um, and I do want to emphasize that when this 4-hour candle opens at, well, we have a 2 a.m. candle. This is important if you're trading London to look at this 2-hour candle when it opens. Again, we don't anticipate manipulation before 2:30, but it's just a nice confluence to use with London as well. And know that when that 10 a.m. candle opens, if price is going to go lower, we're going to see an open, and we're going to see that high. Now, that little wick, that high, can easily take you out of a stop. So go back in your charts, just do some evaluating whether it makes more sense to wait to 10 a.m. before you would potentially jump into the trade and wait for that candle, or just know if you enter a trade before 10 a.m. that you have that spring back, like a spring on a machine. You get that it's going to come up before it goes down. You have to be able to weather this. And sometimes it can be like as much as this wick, right? Open high and then it drops. So it's just something to keep in mind, I generally don't want to enter a trade before 10 a.m. because of this, because this wick can take you out of a trade. And you, of course, you don't want a stop loss that's so big that it doesn't make sense for your risk management. So this is something here that keep it in mind. Keep it in mind that it's going to happen. And that's that, guys. We had a beautiful trade, 300 points today. So what did I take on Monday? Was that 250 points on Monday? And today's 300 points. So that's 350 points. And then I think I had like some smaller trades, like 60 to 100 points. But overall, back when I was learning ICT, I never imagined that I would be taking 600 points out of the market consistently in a week. I always thought like 100 points would blow my mind and I'd be happy with like 50 points. But it's really crazy that when you work with the hourly time frame, so the daily, the hourly, and then look for your entries on the 5 minute, between the 5 minute and the 1 minute. If you wait for these, if you have these hourly PD arrays on your chart, they give you some really nice runs. And that means that you're not going to take a trade every day. And you don't need to take a trade every day, because if you have multiple trades in a day, you're getting charged for those fees, and those fees add up really quickly. So as part of your, not your strategy, but your system, bear in mind how many trades you're taking and what that cost is on a weekly and monthly basis, and put these hourly PD arrays on your chart. And again, there's going to be days where there's not going to be a trade, and that's okay, because we're wanting to find setups like this, low resistance liquidity and a good run, and you only need 2 or 3 of these a week to make you really happy. Okay, guys, that's our live stream for this morning. I thank you for your comments, your commentary, your observations. You bring in your absolute best to share with this community so that we can all benefit from your wisdom and your expertise. And I will be back to see you guys tomorrow morning. Go and enjoy the day, cut loose, have some fun, do something else. Tomorrow's another day. We live to trade another day. Okay, guys, have an awesome rest of the day, and I'll see you later. Bye for now.